Hey guys, welcome to the weekly video, the Option Trading with Steve. Today I was going to go over divergences, specifically RSI divergence. And here we're looking at a chart of SPY, and we have our RSI here. And we can see that the RSI typically flows with the stock. And if we kind of zoom in here, and we could see, okay, we had a little down and then it moved up, right? We had it down, it moved up. Typically, the RSI is going to mimic the stock price because the stock price is telling the RSI what to do, right? So in reality, we want to see the RSI move just like the stock because essentially what we're looking at is a line graph of the stock. So if I change my stock to a line graph, it should look like my RSI. So not so much here as we had a lot of volatility here, but when we're moving out like here, smoothing out, right, we're basically same movement, right? Almost exact, right? Almost exact movement. Got a little dip here, got a little dip there, right? Little cup, little W, another little W. Okay. Basically, the stock line chart should look like the RSI. And that's what we want to see in a healthy stock. We want to see that the line graph of the stock is very equal to or very similar to the RSI. Okay, and this is how we can find the divergences, right? So here we have SPY and we have the RSI. Okay, very similar. Similar here, similar here. You could reflect the RSI as, a line graph of the chart of the stock. Okay. Now, we use candlesticks because they give us more information and they're easier to read, right, than a line graph. Okay. So how do we find these divergences? Okay, it's fairly simple. We got to look for different information that the stock price is telling us versus what the RSI is telling us. Okay, and we could see in this here, we could see that, okay, if the RSI typically follows what the stock is doing, okay, we make a low, okay, we make a low, okay, we make a high, we made a high, okay, we made a higher high over here, okay, we made a high, we dipped a little, okay, we dipped a little, okay, we made a higher high than this high, okay, and we made a higher high, okay, okay, we came back down, and here we made a higher high here, but it wasn't higher here, okay, so that is a divergence, right? The stock price here makes a higher high than the previous high, but this one doesn't. That's it. That could signal that, hey, there's going to be a drop soon, okay? And it does drop soon, right? It wasn't that big of a divergence, right? But it is a divergence from what the stock is telling us, right? So we have a high and then a higher high, and then we have a high and a lower high, okay? And then it dips, okay? But bounces off near that 50, comes back up, okay, and then makes a higher high. And then here we make a higher high, okay? Then we come back down, we make a lower high, okay? We make a higher high than here, but we also make a higher high than here. Now, we make a higher high than this one, but we don't make a higher high than this one. So here is another divergence, right? So here's another divergence in the RSI versus the stock price, because we could see here that we do make a higher high, and here we make a lower high. And that is suggesting that, hey, we made a high here with a lot of buyers, right? Because the RSI is just measuring buyers and sellers, okay? It's our miles per hour game. How fast are we moving up, right? How much speed are we taking? So here we had a lot of speed, we had a lot of buyers, and we made this high, okay? Here it looks like we have even more speed because we made a lower high here, but then we made a higher high than this one and this one. So we made a higher high than two previous highs, okay? But our miles per hour gauge says, wait a minute, we're not moving that fast, okay? That's a divergence. So we got this pop up and then we fell down, okay? So anticipate a drop. Whenever you see divergences like this, it could be a small drop or it could be a big drop. But be prepared to see a pullback, whether it's a small one or a big one, when you see these divergences in the charts. So when you see your stock price hitting higher highs, but you see your RSI hitting lower highs, that is diverging from your stock chart. Remember that if you put your stock chart on a line, you see here we made a high and then we made a higher high. And on our RSI, the same line chart, right? It's supposed to be identical. We made a high and a lower high, okay? Here we made a high, we made a high. Over here we made a higher high. Over here we made a lower high. It is diverging from its big brother, right? If the stock price, the chart, tells the RSI what to do, then it is diverging from what it's telling it what to do, okay? So this is how you can catch typical tops, okay? Now if we come back to our candles, and we could do that as well for not only the tops but also the bottoms. So here we have a low, okay, and we have a low here. Okay, here we have a lower low than this low, right? But here we have a higher low than this low, right? And then here we have a lower low than this low and this low. And here we have a higher low than this low and this low. So here we have a downtrending of lows. And here we have an uptrending of lows. Okay, so here again, we are diverging from what the stock is telling us. Okay, and if we go to our line graph again, we can see that here again. Here's a low, here's a lower low, and here's a lower low. Whereas here's a low, here's a higher low, and here's a higher low. So this is diverging from what the stock chart is telling us, what the price is telling us. Okay, so that's gonna give us a divergence saying, hey, we're gonna possibly start heading up. You got to be watching that. Okay, if the RSI is saying we're making a higher high and then a lower high, but the stock chart is saying we're making a high and a higher high, then that is diverging. These two are diverging from each other. Okay, same thing with the bottoms. If we're making a lower lows and lower lows, and the RSI is making higher lows and higher lows, we're diverging. We're diverging. If we're diverging, then that means that there are buyers coming in, okay, typically through like the back door, right? Their buyers are coming in. Not as much selling is happening as our price suggests, right? So that could be either because there aren't as many sellers in the market, or there are buyers creeping in, right? Because this big volume here, that had lot of sellers, okay? RSI was telling us there was a lot of sellers there, a lot of sellers, okay? There's still a lot of sellers here, but RSI was saying, hey, they're not that strong. They're not as strong as they were, okay? So that means that, okay, the sellers are kind of getting tired. Sellers getting tired, even though the stock price is still dropping. RSI is telling us, okay, our sellers are getting a little tired. Um, it's time to switch our thesis on we're coming down, we're going to be coming back up, right? So here, these two lower high or higher lows, sorry, these two higher lows suggested that we were going to be turning soon, and we did. We had a nice rally, right, from 260 area to 280 area, right? A 20-point move off this divergence here, and even off this divergence here, right? We had a $5 move, right? And off this divergence here, we had, you know, a big $30 move, okay? So something to keep in mind, sometimes the divergences do give false signals, but it is something to keep in your back pocket as a tool to use to see, you know, if you are at a top or if you're at a bottom. You know, we could do this with other stocks as well. FedEx had one as well here, where we had a low here, we had a low here, we had a lower low here, we had a higher low here, we had a lower low here, and we had a higher low here. So here we have this divergence. We have this divergence, and from here we had a pop-up, right? We had that pop-up, okay? So this works on any stocks. I liked it on SPY specifically because we could see the top bullish or a bearish divergence, which is this case, and a bullish divergence, which is this case, okay? Very simple to see. If you want to double check it on versus your chart, just go to the line chart and see, okay, is my line chart of my stock diverging from my RSI? Because my RSI should be a line chart of my stock, okay? And if it isn't, that means there's a divergence, okay? A divergence just means it's diverging from the mean, and the mean would be the stock chart. So if it's diverging from the stock chart, you're having a divergence. So whatever the trend is, think that the trend is going to change because of the divergence. And like I said before, sometimes there's a false divergence signal. So wait for the stock price to confirm it, right? So wait for the confirmation that, okay, there's weakness now, okay? Volume is starting to pick up above average, okay? To the opposite of the trend, okay? So my divergence is suggesting, okay, maybe this is real. And same thing here. Wait for the volume to pick up above average, okay? When it picks up above average means, okay, my divergence is real, okay? I hope you guys like this short video about divergences. If you like it, please give a like and subscribe. And thanks for watching, guys.